Good morning.
IBTC.
Good morning,
Stanbic
everyone.
IBTC. It can be.
Hey, morning.
All right, here we are. It is gone past 6:30, which means it is Business Express on a smooth breakfast. I'm Sope Martins, and joining me for today's episode of Business Express, I've got Mobola, and she is the head of money market trading and global markets at Stanbic IBTC, which is our sponsor for this episode of Business Express. Mobola, good morning. How are you?
Hi, Sope. Morning. Thank you for having me this morning.
Great to have you on for today. Now, I've got a bunch of questions that I'm going to be throwing your way. And people, of course, if you've got questions and if you're interested in some of the things that Mobola talks about that, have pertinence in your life, go ahead and send us your questions, send us your comments on WhatsApp. The number to send that to is 0809 440 981. You can also use the hashtag BusinessExpress981 up on Twitter. All right, so Mobola, you ready?
Yes, I am.
Okay, let's do this. Now, the first thing that I want to find out that I'd love you to help us understand is what you do for Stanbic IBTC as far as money markets and fixed income instruments are concerned. Tell us all about it.
Okay, so I trade proprietary trading for the bank, which means I buy treasury bills and fixed income instruments for the bank and also its clients as well. We also participate in the monthly auctions from the DMO. So that's the debt management office. So whenever the government is trying to raise money, they raise money via the debt management office. So we also participate at the auctions as well on behalf of our clients and on behalf of the bank as well. So that's basically what I do. So I trade short tenured instruments and long tenors as well too sometimes.
Okay. All right. Now, how exactly would you describe the interest rate environment for fixed income and the money markets? Because we've kind of seen people looking for higher rates and going to places they may not necessarily know about and lose their money.
You can't tell me about that. But yeah, I would say that the environment right now is what we'll call, I would use financial jargon called bullish. There's a lot of interest in bonds and treasury bills at this moment. I know rates are relatively low at this point. We have the treasury bill rates. Yesterday we had the auction where the 1 year closed at 5.39, which is relatively low. But then at the end of the day, it's the most, I would say, relatively safe instruments, and it's short term as well too. So we're seeing quite a bit of interest from the asset managers, the pension funds, and even the everyday guy on the street as well too. We're seeing more interest even on the longer tenors as well. So on the bond side, we're seeing rates around, the last auction closed on the 2026s at 11.5. So we're seeing quite some interest in that space, and people who would typically not have looked at the longer tenors because of how risky they are sometimes. We're seeing them move from the shorter tenors to the longer tenors, mostly because of the uptick in yields that they can get on the long end of the curve. So I would say that the market is relatively bullish.
Okay, now this auction that you talked about yesterday, you said 5.39, right? Which is quite low, but people were still coming to it. So I mean, how would you describe investor sentiment based on the results? I'm guessing they are looking to feel safe.
So I would say that, so yesterday at the auction, so first of all, we saw rates come down across all the tenors of the curve yesterday, but significantly was the 1 year. So the 1 year bill, we saw that come down by about 10 basis points. So the last auction was at 5.5. This last, the one before the last one was at 5.5, and then the one yesterday was 5.399, so technically 5.4. And the subscription level was mind-blowing. I would say that it was a successful auction for the DMO, given the fact that I think that the total subscription that we had yesterday was relatively about 400 and something billion, about 483 billion on the long end of the curve. And what they were only looking to raise in total was roughly around 129 billion. So they were able to even get more than that. They got about 223 billion in total yesterday, and rates still came down. It's just to show you how much liquidity there is in the market and how much people need to invest that cash that is lying around in securities. Currently in the market, we're seeing overnight lending rates in the overnight market around 1%, 2%, mostly because of the amount of liquidity that's in the system. Currently, we have bond maturities coming in as well to today. We had a bond maturity of January 27, 2022, roughly about 600 billion maturing into the system. I mean, that money is definitely going to look for securities to buy, and people have to, I mean, as a portfolio manager, you have to give returns to your clients. So everyone is looking for securities to buy. And we could see that filter into the T-bill auction yesterday. Hence why the rates came down slightly by 10 basis points to 5.9. Yeah.
Okay. All right. Now, for the federal government bond auctions now, let's take a look at that. How exactly will Nigeria utilize them this year? Is it going to be to plug that very large budget deficit?
I mean, that budget deficit is a bit scary, 6.39 trillion, right? Yeah. But then we've seen them sort of, definitely that's what it's going to be for. And then we've seen them apportion how they're going to try to raise the deficit. So out of that 6.39 trillion, the government has communicated that they're going to be looking to raise 2.51 trillion of that from local borrowings. The other 2.5 is also going to come from external borrowings as well. I think that there might be a bit of struggle to raise the external borrowing side, especially if they're looking at like the Eurobond side, which I don't think is expedient at this point in time, given the fact that we're having rising rates in other safe havens. So the likes of the US, we've seen the Fed come out to say that they're considering tapering and that they're looking to do that as early as March. That means that rates in developed markets will be going up, and it may not be favorable for us to access those markets in these times when rates are going up, because we would have to pay extra for that. So I think that most of that borrowing will be done locally, and definitely would see some of it going to funding the deficit as well. Yeah.
I mean, I'm not sure if we could have avoided that anyway. All right.
Yes.
Now, something that the CBN said is, I'd love to get your take on it. So Central Bank of Nigeria said that Nigerians should avoid borrowing money from loan sharks. So can you give us a little bit of insight into the rationale behind that and what the dangers are of this action?
I think the first thing, and like what he said as well too, is when you go to loan sharks, they would give you, I mean, if you're going to borrow from the bank, you have like relatively lower rates than what the loan sharks would charge you. And if you listen to like the MPC meeting where the governor was talking about how if you go to the loan sharks, they would, and you can't pay as that when due, they would come for your TV, come for your bicycle, whatever it is you have. And I've even heard stories of how when you access that loan, they would sort of ask you for your contact list. And then when they get your contact list, and when they get your contact list, basically they'd start to call everyone in your contacts to ask that you pay the loan if you are not able to pay at that point in time. So that's the first risk. But then I think the more important thing is what rates they charge. You find that sometimes people are paying almost double the amount of the money that they borrowed by the time they're done paying the loan. So say, for example, you took a loan of 50K or 200K. At the end of that loan, you're probably even paying 400K, which is almost double the amount, or exactly double the amount.
That is 100% interest.
Exactly. So I guess what he was basically trying to say was, come into the financial system. Don't think that the formal financial system is only for people who have a long track record of good finances, or have like a fantastic business that's running and people are willing to loan them. Come into the financial system. Yeah, tell me.
One thing I would ask you though, because it's all well and good to say come into the financial system, but are there specific kind of instruments that are targeted towards people in the informal sector to bring them into the financial system?
I mean,
see, as I'm using the gestures.
Yeah, they're the microfinance banks, right? Which is still under the purview of the CBN as well. And I guess that they have sort of incentives to bring people in the informal sector into the financial system. So I guess that was what he was sort of alluding to, that come here rather than go to loan sharks, where you risk the possibility of losing all that you have just because you can't pay the loan as at when
portable.
Yes.
Yeah. All right. Okay. Well, hopefully, from his mouth to the relevant people's ears. Okay, now moving on. So the head of America's central bank, Jerome Powell, yesterday suggested that the United States might raise its benchmark interest rates in March because they kept it pretty stable, 11.5. Wait, no, that was us. What am I talking about? So what would you say about that?
Yeah, so the US has been in this, we've been talking about like tapering since, and it's been a fallout of inflation, and they've been saying that they're going to taper. And I think yesterday they just signaled again that it's going to be earlier than planned, and it's most likely going to be in March. I mean, the immediate effect of that is that rates would start to rise. And we can even see that has already had like an effect in the stock markets in the US.
And we don't say that was seismic shifts going left, right, and center.
Exactly. And like we saw like a lot of tech stocks get beaten last week, inclusive of Bitcoin. Everything literally was being sold off last week on the back of this news of tapering coming in earlier in March than further down in the year. I think that what that portends for like other emerging markets and frontier markets is that you would see people fly back to safe havens, because the reason why money was coming into those other markets was because we had higher rates. And then, of course, the safe havens like the US, the UK, they all have really relatively low rates. But now that rates are going up there, interest rates basically are going up there, then you'd see like a flight to safety back to those safe havens that can sort of give them a good balance between credit risk and yield that they can earn.
Okay, gotcha. Now we've got less than a minute left, but I still want your take on a couple of things. So I'm going to merge them together. So, I mean, now that you've talked about what happened with Jerome Powell, coming home, our CBN didn't seem too bothered by what was happening in the United States. So I'd love to get your take on that. And do you think at any point in the future, near or far, that the CBN is going to have to raise the rates here in Nigeria?
So I can imagine why he wasn't too bothered. The real reason why is, and he stated that at the MPC meeting as well, stating that those countries the countries that are really bothered about the rates going up in the US had gotten inflows from the US or from portfolio managers in developed markets, and Nigeria did not receive those inflows. So we're not like in that position where we have to sort of safeguard our reserves and sort of raise rates to attract other people from safe havens into our country. And so that's why he wasn't exactly bothered about it. I think that Nigeria would sort of look at the economic indices that they need to as pertaining our own country, and then met out what is necessary for the country.
Okay, and we got a couple of messages in from Ladele Johnson and Ike Peter, who both say with regards to the loan shark issue that they're still looking at accessibility and speed of getting the money to people in the informal sector. So they're saying it's, some people will still say that it's easier to get a loan from a shark than it is
Well,
quicker than it is to get it from a microfinance bank.
you never know. Try first and see.
All right, Omobola, thank you so much for joining me for today's Business Express. Like I said, Omobola is and I'm going to, give you your dues because you've been fantastic. She's the head of money market trading and global markets at Stanbic IBTC. So, go and find her if you have more questions. Okay. Omobola, thank you so much for joining me.
Thank you for having me. Nice chatting with you. Bye.
Good to have you back again. Bye.
Okay.
And Lagos, that is that coming up. It is going to be great music, throwback music for Throwback Thursday right here on Smooth Breakfast.
Business Express on Smooth 98.1 in association with Stanbic IBTC.